Do you want to just make some comments on pricing?
Pricing is, and I'm not surprised you get lots of questions around pricing, because I reckon pricing in data analysis services, reporting advisory services is difficult because people aren't used to it. They don't know what value is. The problem is that for a lot of firms, we've always worked out value by time to produce, right? Now what we're talking about is okay, there is time to produce a template, to upskill, things like that. But potentially the value is far greater than the input. So how am I actually going to price this thing together? And I'm just going to draw a distinction there between bespoke projects and then some of the more organized kind of delivery to clients. I'm a big believer around where we've got a template, like say a Xero template for clients that we've produced to go across the firm, is that I think that there's this tendency to try and give it away to a degree, which I'm not a massive fan. I think that there is a lot there that actually delivers consistent value. So in those kind of circumstances, I say, hey, connect your template to an advisory service and then, put a price on that. Now, some firms I know that price can be, well, there's a lot of firms I know that give it away, stop it. But, some, go, hey, here's $50 a month for this template, or others go up to $500 a month. I think that pricing is more correlated with the advice and the conversations that you're having than recovering your investment in there. And we see that with some firms, that very much that the templates are the talking point, the value to the clients, the advisory. Okay. So use that where we've got it templatized. Where we talk then about more specific things for clients, where we're building something bespoke for a client, I think that it gets a lot harder for people to try and talk about how we're going to price this. Like, I've got resources and everything else like that. There's no silver bullet for that. I think that a lot of it from our experience is coming together with the client, once again, working out the value and then working out the cost of it. More and more, we tend to move to more monthly or regular recurring type payments rather than once-off project costs. Number one, to obviously reduce that initial burden to get it across the line for the client. But I think there's also this propensity that as we start doing more of it, that we still consider it, what's the WIP cost of developing? And more as we move into this, there is less WIP that is identifiable to an individual project and more that is framework type cost. So for most of our projects, we have a look at, okay, what would be the WIP cost plus what would be the framework cost that we've got in there as well when we start talking about pricing? And then what's the value on it? Like, is it then going to be surrounded by an advisory service? So, for some firms, we sit down there and we spend a day a month where we're doing data discovery. Okay, where we're telling them what they didn't know about what they don't know and things like that. So when it comes into it, I still go and say, hey, even with the project ones, work out where that's going to sit in the organization, especially as people move into data analysis. It's not, these things are generally not one project. Like, once we open up the box, it actually turns into, well, I'm starting here. And then I actually want the next piece, which is the challenge for most firms, I find, because what we do generally is we start with financials. Okay, it's comfortable, it's easy, it's exact. We know if we're right or not. Okay, if it doesn't balance, we're wrong. If it does, we're right. So that there's this black and white that comes in with financial analysis. However, for most businesses we deal with, that's probably only 30% of the pie that they actually want to look at. The operational type reporting is actually much more important to day-to-day operations. And people don't like me saying this, but financials are outcomes. Operational is drivers. Okay, so the more we can get into operational reporting as accountants, the actually better off we're going to be. However, it gets murkier. Like, we're not experts in operational, right? So there's this bit of this propensity to financial only. And that's what we're trying to personally change with our clients, is to actually go and say, hey, we've got a specific specialization in an industry. So let's say it's manufacturing. It's now about getting the data team to work with the accountants who specialize in an industry and start getting that knowledge out of people's heads. So one of the things that I always do, and pandemic's made this hard, but we always try and do, is, for instance, a walk around. Okay, go and visit a client, walk around, try to start understanding what's going on. Bring other members of your team with you as you go. Understand the client. Because personally, I think that to be successful long term, I think we are going to need to analyze, reconstruct, and report on operational data to a greater extent than we do financial data. Financial data is a good place to start, though. Don't get me wrong. It's a great place to learn your skills because it is exacting. Operational data, you're not going to know necessarily unless you walk the floor and understand and collate all the other data together. But to me, from running accounting firms and engineering firms and things like that, that operational data is massive, but harder to price, harder for people to understand and put a value on. And that's why I go and say, well, this is where we start with friendly clients who want an outcome, who you're going to learn with at the same time to understand an industry, but bringing in multiple members of your team. Number one, you're going to learn from them. Secondly, they're going to learn some of these tools. Thirdly, they're going to be looking for opportunities, right? So they're next in that same vertical when we go and say, well, actually, we can come up with a closing WIP figure that is segmented by product category, product group automatically, applies to a lot more customers than the one that we're currently doing pricing for. So I guess what I'm saying is involve everyone, because you'd be amazed what you can learn.
Yes, it's probably not, I'd say it's not our strong point, but it's probably something that we've really taken Atami and Power BI and utilized it as our replacement or as our reporting function, if you like. So I won't sit here and go, we're charging a fortune to lots of people to provide them with Power BI reports. I actually more look at it as a real selling tool for us. And it is the service offering that has really helped us land some of the biggest clients that we have in the firm. So can I sit here and go, we charge this much per month to produce a Power BI report for this client? Not really. Can I tell you that having the ability to produce consolidated reports and reports that allow a multi-entity business with, say, 10 different entities, the ability to compare data across all those entities has landed us, clients worth $100,000 a year to the firm? We have been able to do that.
So are you trying to suggest that you've been most successful in the consolidated space on winning business, or has it also been sort of the operational data that's helped as well, the operational connectors?
It has not been the operational data for us at the moment. That's probably been a space that we haven't done as much in that we would like to have done in, and we need to do more, but also we still need to sort out our consolidated and financial data and financial reporting for people as well.
Yeah.
I think what we haven't done is play to the strengths of what Power BI is. And that's, I was going to give someone advice around, what to build in Atami. It would be play to the strengths of what Power BI, I should say, is there to provide. And it's data visualization. It's not tables upon tables upon tables of data.
The reason is your business model looks roughly like this, which you could probably analyze just by getting a few reports and that sort of thing, and say, in order for you to grow, we need you to monitor these numbers. If you monitor these numbers, there's a $20,000 or $50,000 upside to you, because if you see them, you'll be able to push them, you'll be able to make changes, you'll be able to make informed decisions. And you can't tell me that that's not worth something to someone. In fact, it's worth $20,000 or $50,000 to them. Now, you might not charge that much, but if you say, if we can get a $50,000 upside here, and we sell this custom work to you for $5,000 or $10,000 or a subscription service or whatever the case may be, then it's an easier conversation. So if you're talking to the client about, selling to this on an hourly pricing basis, or saying, it's a lot of custom work, it'll be, $10,000 upfront fee, and they're sitting and they're not hearing about how it's going to help them, or what it's going to mean to them and their personal fortune, because often we're talking about that with small businesses. It's them personally. It's right on the table for them. It's real. It's not like larger businesses where they, have a budget. They're all employees of the business, there's a group of shareholders that they never meet or can't possibly personally know. And so it's kind of, okay, we're happy to spend that money because it's not really ours. But for a small business, it's always personal to them. So you've got to talk personally the upside to them for these sort of analytics. So I agree that it can be hard, but if you don't sell it in the right way, then that's kind of the reason why it is hard. You've got to put in the upside for this. So I think there's demand, I think there's need, and I think there's value. And if you have those three things, then you have a product that you can sell.
Does it make you nervous that you get into a situation where you say, oh, it's going to be, it's going to offer you, 20 grand, like you said, 20 grand or 30 grand of value by doing this. But then is there a nervous aspect to that you may overpromise and underdeliver because then you're like, what if I'm wrong? And they don't actually see a bump in their money, in their revenue. I mean, then do you not charge them,
Absolutely. I can understand where if you're making those sort of promises, you've got to have a reason for that. So for us, historically, what we've done is that we would have done prior to this some kind of analytics on their business model already. So we might have their profit and loss, for example, for the last 3 years. We'll get some, let's say it's a trades business for the sake of argument. We'll get how many paid hours they've had for those years in question. So how many paid productive hours. We will have worked out how do they charge. So it's usually an hourly rate plus a markup is the standard within the trades industry. It's pretty standard, and it's usually a percentage of markup and an hourly rate that they'll charge out for their employees. And then we'll work backwards basically to say, okay, you've paid this many hours and you've charged out based on your markup and your sales, you've charged out X amount of hours. And it's usually, it's always lower than the paid hours. And it's been anywhere between, we've seen a productivity as low as 46% of those hours actually being charged out, as high as, maybe about 70, which is probably where about in the ballpark of where you want to be because of annual leave and long service, sick leave, and so on and so forth. So from there, we say, well, what if? It's a classic kind of modeling situation where you can do this in Excel, and that's what we do it in. There's no need for Power BI in this process, and therefore no need for that big hurdle to jump, where we say, well, what if you can improve these figures marginally even? So even just a couple of dollars charged out per hour difference or gross profit per hour, it makes a huge change to the business or an increase in productivity. But these are numbers that you don't see in a profit and loss, that you don't see anywhere else, or that the business owner might have in the back of the head, no, I charge them out, I do this all the time, but the actual financials tell a different story. So what might actually be happening is that everyone's busy, but we're not actually recovering all those hours in fees, be it because of their fixed price work or because, if it's a plumbers and the plumbers are coming back to the office all the time to talk to the office people and not actually going from job to job, which was a real thing. That's based off a real story. And, these are the sort of things that you can immediately identify and prove, but you don't really know about it until you start looking at some of the analytics. You can't specify it. Some of it, the business owner will say, oh, it could have been because of this, etc. And it's gut filling, and you can get a certain way there. But I guess those upsides, or that process that we do to say, all right, what's this going to look like? If, is there room for improvement here first, makes us very confident to say, well, there is this $20,000 or $50,000 upside for you. If you can move these numbers, here's a product to help you look at those numbers on a real-time basis. We can send you reports out to you weekly, and so it lands in your inbox. You don't even need to log into the thing. And your focus there is moving the needle. And when people focus on and start seeing these numbers on a regular basis, they start making changes around it. You almost don't need to do anything else, because if people are what gets measured gets managed. So when we I guess promise, if you will, those sort of upsides, we're usually very, very confident. There's always a certain degree that the business owner will still need to take action. They'll need to do something. because it's not enough to just see a number in terms of, if you just look at something and ignore it, nothing's going to happen, right? But if people look at it, take action of it, measure the outcome of the action, and keep on, improving on this process, then you can have fantastic results. And we've seen that time and time and again. And these sort of analytics programs, I guess, speed up that feedback loop. So if you're talking 10 years ago or 20 years ago when we first started doing this, these programs weren't around. So it'd be laborious work looking at what was happening in Excel usually, and a lot of work to try and do these analytics. Whereas now Power BI is this fantastic time-saving mechanism for us because we can set it up and automatically refresh, and away we go, right? So it's, as well as the visual display of it, means that you can do quick analytics a lot faster, or look into, your suspected hunches, this type of work, maybe I want to look at that and see how it's going, or this particular customer, okay, I can flag up that they're a problem customer a lot quicker than I did this sort of analytics once a year.